Hello traders, this is Rich Derrick from Tradesight with the market preview for Tuesday, March 12th, 2013. We had a pretty decent session today where we recouped some early losses. We had a gap down in the morning, but the S&P futures were able to recoup that along with the NQ futures and post another positive session. Well, on the surface, it seems like it was kind of just yet another kind of lackluster update. There were a few key technical developments, especially internally that we'll be looking at just a few moments. The TLT had a pretty decent session, and we're definitely seeing some continued rotation here. But we're going to have to take a look and see how much gas might be left in the tank. And just give you a little preview here. The tank's getting pretty low. So let's move on to the S&P and the NQ futures, and then we'll get onto the market internals and then the individual sectors for tomorrow's play. All right, here we go. Here are the ES futures, and we did push up a little bit higher again today, back up above this 1550 area, right in that neighborhood. The key technical development today is that after having this little bit of energy loaded into the market, we've now released that energy to the upside and pretty much spent what was loaded into the market when we got a little bit oversold here in the very short term. Today now you can also note that we did record 13 days up in the seeker. Here's your 9, here's your 13 in the seeker. So now we have an exhaustion warning in place. And any candle now, we could get a turn down to the downside that's actually going to have some teeth to it. Of course, we're going to keep a close eye on the 10 EMA, which defines the short-term trend. We're still above that. We do have a decent close here, but if we take out that 10 EMA and close below it and then qualify that, then we'll be into a short-term downtrend. Point of the seeker here with the 13 in place now is that we should be on guard that if we do start to turn to the downside here, this could actually have a chance for gathering some downside momentum. When we turn down here, you can see we didn't have that seeker count in place. We're only at bar 7 as we were starting to roll over here. So the move was too immature in both time and price, and now in time and price, as measured by the move and also the number of days here, we do have the potential for a downside reversal. Here's a look at our NQ futures. Our NQs are going to be 9 days up today. Let's see, 1, 2, 3, 4. Yep, 9 days up today. Still kind of just hammering below this 8-ace level at 28.1250, unable to get through that resistance area. Remember, these 8-ace levels are very, very important levels. One of the very strongest Murray Math levels, and we are also in combination with that now 9 days up in the NQs. So we definitely could see a roll down and get back into these into this support area. That's been this trading range that we've essentially been that we've spent most of 2013 in so far. Let's move on and take a look at the market internals and see what they're reading. First thing I want to take a look at tonight is kind of our risk-on, risk-off gauge that we've been using, which is the S&P, which represents the broad market divided by the TLT. So the broad market, growth-oriented, divided by safety of the TLTs. We've been working in this channel to the upside here. We've had a couple of bumps down where we've seen some corrective activity, only to see it pop back up to this trend channel here and then fall back down again. This was coincident with that little sell-off that we had a couple of weeks ago, only to kind of flip back up and recharge. And now we've spanned the entire range of this channel. Now we're bumping up against the upper boundary of this channel where that little relationship has become too extended to really punch further right now. So we're technically up above key resistance here in this risk-on, risk-off measurement. The other thing we want to keep an eye on is the SOX versus the NDX, which is kind of also one of those key leading indicators. Right now we've flattened out. We've not been able to recoup this level. This is the weekly chart. If we go to the daily chart here, you can see that we're kind of forming this little bit of a topping pattern here. Hard to tell whether it's going to be a topping pattern or a consolidation for continuation, but the fact remains that we're just grinding here below this key breakdown area and have not been able to recoup that. So until we get back above that, that's still a negative for the NASDAQ overall, and it's definitely keeping the NASDAQ from gathering any upside momentum. These gains that the NASDAQ has been putting on have been very grudgingly kind of acquired, and has been kind of just pushing a boulder uphill. So this remains still in this key resistance area without any kind of breakout or any kind of upside momentum developing. All right, now here's a look at the cumulative advanced declines. Down below here is the NQ, the NASDAQ side of the market. You can see we're still below this high water mark that we've set. We do have a nice positive bias here. Today we made no ground. We actually flattened off today and haven't been able to take out that prior high. So got to keep an eye on this to make sure this doesn't develop into a trend. Even though we were higher today, the advanced declines made no real progress, which is always a problem. We're only plus 65 issues on all of NASDAQ, even though the NQ futures were higher on the day. On the broad market side, represented here by the New York Stock Exchange, it's been healthier, but it still is starting to level off here. We were higher a little bit today. We're only plus about 200 issues today out of all the stocks on the New York Stock Exchange, so it's not really that impressive after recording a new high in the move. So this is something that could definitely develop into a very negative situation, but for now it's okay. One day does not make a trend, but if this persists and we start to see this roll down, then we have to be very, very careful that we don't see some real corrective activity on the other side of this. All right, now here's the other thing that I wanted to point out. This is very important. This is the 10-day trend. When we had that little corrective bounce to the downside a couple of weeks ago in the market, we very quickly recorded an oversold reading in the market, where the market got full of oversold energy. It pivoted and took out the highs, the previous highs in the market. Now, for the first time this year, we are recording an overbought reading that's below our 0.85 threshold. Now the market is loaded with overbought energy in the market to be released to the downside in the form of selling. And for those that may be a little unfamiliar here, I'll put this up. This is same chart, but this time I just popped it up to the top, and I put the broad market here, the SPX, on the bottom. What I wanted to point out was that when we got this oversold reading, okay, this trades contra to the market. So when we got the oversold reading here to the upside, that loaded the market here with reversal energy. So as this was climbing and climbing above the 1.35 threshold, we got oversold enough here in the market to pivot back to the upside, and that's exactly what happened. What I want to point out tonight is that for the first time in 2013, here's our delineation mark right here. Here's the beginning of 2013. For the first time in 2013, we're now overbought on this. We're below the 0.85 threshold. So now at any point we could have a roll to the downside here that has some teeth to it. The last time we hit that oversold at the overbought reading of 0.85 and actually penetrated it, we did get this move to the downside. It didn't last very long, but it definitely was kind of a prelude that we were about to see some downside activity in the market develop, and sure enough it did. So here again, we're below that key threshold, so we have to be on guard for a reversal to the downside in the market overall. All right, now here's a look at the multi-sector daily chart. Today, obviously the risk-on assets were okay. The XAU, which is kind of the defensive one here, that's the gold line, was just kind of hovering around where it's been. We're actually potentially setting up a higher high. We'll look at that chart again later. But definitely, if we roll to the downside and start to see some bearish activity develop, one of the first things you want to look at is the XAU on the long side. That'll probably make a pretty quick move to the upside. It may take a little while for the market to actually develop some downside momentum overall, but I think you're probably going to see some real quick switching and some short covering into the XAU sector, and you'll probably see the gold and the precious metal stocks really start to pop very aggressively, very quickly if we do start to see some downside. That move is probably going to be a little bit more linear than stocks in general starting to roll over, if in fact that does happen. So definitely keep an eye on the XAU on the long side here for the next couple of sessions. All right, so on the BKX in the daily time frame, punched out a new high on the move. We are now officially in this real good overbought territory. That that exists above the 8 ace level here, so we're not quite at plus 1 ace, but we're definitely into the overbought territory. The CCI is definitely high, and we've had a pretty good extended move here. Overall, we're definitely well above all the major moving averages, and this is the top performer on the day, up about 1%. So definitely keep an eye on this. If this starts to head lower tomorrow, kind of look for the potential of a king and queen candle setting up here, pulling it back down to the 8 ace area. So 56.25 is going to be key support for the BKX tomorrow. The BTK still has a seeker exhaustion in place here. It's going to be 9 days up again today, so that's another key thing that could point you to being on guard for more downside here. So the exhaustion level, exhaustion signal has not failed. We're just kind of up in the area of that risk level, or the stop loss, if you will. Hasn't even actually technically been touched yet, so that sell signal is still active in the BTK. SOX index today was okay. It was up on the day, but not very convincingly so. We also have a seeker 13 exhaustion in place here. We're still kind of trapped below that 8 ace level, so we've got key resistance right here in the SOX index. Onto the OSX, the oil services. Kind of an indecisive day. We took out the low from Friday, but we're still kind of in the same range. The 10 EMA is still upsloping, and we're on deck here with an exhaustion signal from the seeker that's very, very close at hand. Here's a look at the levels for you. 250 key overhead if they can get there, and if we do get to 250, we're probably going to wind up getting a little bit deeper into that count for the ultimate exhaustion for the seeker. Here's a look at the XAU, which was the worst performer on the day. Still below all the major moving averages, still has a ton of oversold energy in it, and this could pivot up at any time. MACD is buried here and has plenty of room to go to the upside here. I would definitely think that if we see some corrective activity in the market, we could see a sprint up to this 4 ace level at 150 in a heartbeat, probably just in a couple of sessions, if that's going to be the case. The other thing we want to look at real quick here is we want to look at the gold futures. Okay, here's our gold futures. We're still basically just trapped up in this same area here. This could easily pivot here. This area has been very, very well traded. It's got all that inside energy wound up in it, and if and when we break out of this either way, should be a pretty decent move in the gold futures. Now for the oil. Oil was trying to curl back up here. It's trying to get a little bit of a positive bias going here. It's still using the 200 DMA for support, which is positive, but we're barely above the 10 EMA, and we're certainly below the 50. So right now, this is definitely not short-term positive. That's going to be it for today. As always, thanks for listening. And definitely keep an eye on the market for seeing this overbought energy release. That 10-day trend is going to be really, really key, and you want to make sure that these other market leaders like the banks, the BKX and whatnot, hold up. If they start to falter, then we're definitely in store for probably what's going to be a little decent downside here that we'll have to gauge as it develops. So thanks for listening, and we hope to see you again tomorrow for the next preview.